Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me as always on Wednesday is Jake from Metrics Finance and Luminary Assets, and David from DeFi University. How's it going, gentlemen?
It's going great, Mike. Glad to be here.
Awesome,
Absolutely,
awesome.
Mike. It's a Fed day, man.
It
Always
is.
interesting on a Fed day.
Yeah, and we just got off a call, the daily call with our live call with David and the community over at DeFi University. So just got my noodle filled with some alpha before we started the show. And yeah, and Jake, I'd like to thank you. I've been using metrics pretty extensively since actually got back into some DeFi positions, some liquidity pool positions, because I'm tired of sitting on the sidelines and not earning. Thought I was going next level, and I was going to pull all my liquidity out and go into spot, and the alt season was going to hit, and I was going to make my nut and be able to get out. And unfortunately, we haven't seen that yet. So I redeployed between 5 and 10%. I think it's closer to 10% of my portfolio back into some liquidity pools. Just just to scratch that itch, so I can earn a little bit while we're waiting for these markets to pump. But Jake, you had a great idea for today's show. I
Yeah.
believe it might have been David. Basically, just kind of pull back the curtain on our portfolios and just kind of show what we're doing currently with these markets, with what they're doing. We're all anticipating a potential alt season,
Yeah.
but the mold's been broken. There's a lot of data that David's gone over, to where we're kind of out of the sweet spot of historically how the bull market and the alt season has hit. So David, what do you think is going on? Actually, you know what, real quick, let's do this. I want to shout out your guys' products here real quick, because again, I'm personally using them and really loving them.
Got to
If
pay
you
the
want to,
bills, Mike. Pay the bills, man.
what's that?
You got to pay the bills.
Oh, absolutely, absolutely. So, if you want to join the conversation in the chat and ask these gentlemen questions, join us over here on YouTube, DeFi Crypto and Airdrops. And then also, if you are interested and want to take a look at Metrics Finance, there's a free version. I highly suggest you start there. Go to the YouTube channel for Metrics Finance, look at the tutorials, learn how to use it. And once it gets to a point to where you're investing enough to where it's saving you more money than it would cost, that is when I would suggest that you pull the plug and actually start paying for it. It just makes sense. Make sure that it's going to give you a return on your investment. That's the way
Typically,
I
that
operate
number.
with just about everything, and I'm sure Jake that you would agree with that.
Yeah,
And
no,
that's
I
why
completely
the
agree.
free.
Typically that number is going to be around $10,000 for most people. So if you have more than $10,000 in liquidity pools or plan on deploying more than 10 grand, you're probably going to want to go with a paid version.
Oh, did we
Because
lose Jake?
did
No,
we lose Mike?
I can hear him. I can see
We
him.
lost Mike.
Oh, there he goes.
Nice.
There
Okay,
he
we're
goes.
back. But yeah, typically that number is $10,000 for most people because at $10,000, if you can make a 5% adjustment, right, over the course of say a month, that's $500 right there, which covers a whole year to our pro plan.
Exactly.
And that 5% adjustment could be higher yield by allocating to a different fee tier, V3 versus V4, or something along those lines. But start free, try pro after you get to that level, or if you're already at that level. If you don't like pro within 7 days, we have an unconditional money back guarantee for your first purchase with us, meaning that you've never joined Metrics before, or if you did it like very, very long time ago, you come back, try it, and then get your money back if you don't like it.
Absolutely. And that's why I feel confident, hyping up, your guys' projects, because I know that you're both honorable dudes. And if people aren't happy with the product, that you'll give them a refund. So, it's definitely nothing scammy around here. And then of course, you can use our link and you'll get over there. And then David over at DeFi University, here's the link in the description of the channel and all the episodes, where you can go over there and check it out. There's also some free content that you can kind of dip your toes in and look at the quality of his product. And then if you want to pull the trigger, there's not a whole lot of places that you can go. And for $97 a month, get Monday through Friday daily live calls with somebody as knowledgeable as David, and
Yeah.
be able to ask questions. I mean, a lot of times it's thousands of dollars, a year, sometimes $10,000 or more to get that kind of one-on-one, basically a mentorship. So great product, great price. And then of course, we just launched our newsletter over at DeFi Wise, and we will basically be putting that out Monday through Friday. And the people contributing to that is my brother Taylor, who is a state lawyer and deals in real estate, wealth preservation, tax strategies, things like that. He's going to be contributing to that. Also, Jeff, Texas Jeff, that has decades of TradFi experience, is going to be contributing to that, and then some other people, when it comes to DeFi and things like that. But a lot of really good alpha in there. So anyway, that's enough shilling. Let's get right down to it. So, gentlemen, who wants to start? Who's going to pull back the
Me.
curtain on their portfolio first? All right, David, go ahead and
I'll
throw up
start.
your screen, and
So
we'll
here,
get
let me get to a screen share and let's hop to it. So Jake, I want to ask you a couple of questions real
Okay, yeah.
quick about
Real,
this.
real
So
quick though, David, I don't mean to interrupt you. I also want to open it up to people in the chat because I imagine we'll have some extra time. If we do, we're happy to review your portfolio as well. Throw the wallet address in the YouTube chat, right? Make sure you subscribe to Mike, and then we'll go ahead and go through it on the live as well, and we'll just pick apart your portfolio in a respectful manner. Obviously, we're not gonna toss it, but yeah, go ahead, David.
Sure, sure. So I want to start off with this CLP that I've got open sitting out of range on Uniswap V3.
Yeah.
And I want to ask you a question about this, Jake, to see what you make of this. So I entered this position just a couple of days ago. If I bring it on over here to TradingView, this is a daily. I entered with ETH trading right around 40.70. So I entered the CLP single sided with just ETH when ETH was trading at 40.70. And it price entered my range, and now price is sitting out of range on the downside. Now, when I entered the position, I deployed 18 ETH.
Mhm.
I haven't rebalanced. I've claimed my yield twice, maybe three times, and I've got a couple dollars in unclaimed fees. But notice the number of ETH that I have in the CLP uh, is less ETH than what I deployed in the first place. So I have a couple of ideas on how to explain this. But Jake, what do you make of this? How would you explain something like this? I'm curious.
It's actually very interesting. I would imagine that it's MEV right there. Because
Right.
initially when you said 18, I thought you were just rounding, but yeah, 17.81 would be MEV. Huh.
Right? Yes. So I first noticed this, and maximum extractable value, there are bots that literally all they do is they arb pools to extract tokens from CLPs.
Yep.
So they essentially steal tokens from LPs. I don't know if stealing is the right word, but they're able to extract tokens from CLPs.
Yeah.
And it's like, man, I first came across this on Orca, maybe like 2 years ago. I was working with a client. He had deployed some capital into Sol USDC on Orca. He entered equidistant. Price exited his range on the downside. He did nothing. And when price re entered his range and got back to his entry price, he had fewer tokens in the pool, and the US dollar value of the position was lower than when he entered. So I didn't know how to explain it then. We thought at first that maybe it was something shady on the DEX's part. That's not the
Yeah.
case. I don't think that's the case. I think what's going on here is there was a video that I watched a couple years ago, some gentleman, a PhD, describing lever, loss versus rebalancing, and
Yep.
how on a rebalance, you can not just realize divergence loss, but you can actually lose tokens on a rebalance. And the same thing can happen even if you don't rebalance. Just sitting as a CLP, you can actually experience tokens can be extracted from your pool. So that's exactly what has happened to me here. Now, this doesn't happen every time that I, deploy capital into an LP, but this is something, to know. Jake, do you know if V4, if this is a V3 pool, do you know if Uniswap V4 protects against or can protect against MEV like this?
Yeah, so that's a good question. I was just about to ask if this was a V4, so you front ran me on that. But no pun intended, because if you
Well,
do
and
That's
you guys
that's basically what's happening, right? It's front running. That's extracting the value. Isn't that right? I think.
yeah. Yeah.
well,
Yeah.
and when referencing B4, I mean, are you guys, and I'm just speculating on what you're gonna say, Jake, but is that because of hooks?
Yes. So I was about to say that Uniswap v4, I don't think natively has the ability to like kind of combat this MEV built in, but I do think there are hooks that have been created to combat this. Now, let me briefly talk about why it's important to understand hooks. A hook, when you add it to a pool, you are creating a new pool. So let's just say we have the global Ethereum to USDC, which is on the
Well,
0.3.
hold on, Jake, real quick before we dive too deep into this. Those of you that don't know, V4 is the new version of Uniswap. Basically a bunch of pools. You have V3, V4, and V4 allows what's called hooks, and it's basically third-party DApps, for lack of a better term, unless that's the right term, that third parties can write to do certain functions. So I just wanted to make sure they understood that before we went on. But go ahead,
Yeah,
Jake.
100%. So, I mean, and the way I like to describe it, Mike, is I don't know how many people here are familiar with like Minecraft, but with Minecraft, you have vanilla Minecraft, which is like, Minecraft basically. You load up your own world. When you have a Minecraft server, you can have all these plugins, which are like coded things where now you can like place multiple blocks at once. You can do this, you could do that, you can give ranks to people, stuff like that. You know what I mean? Those plugins would be the equivalent of like a hook in what do you call it, in Uniswap. Now that's just because I grew up as a gamer and obviously I'm a different generation.
A lot of people can
Um,
probably relate to that analogy. So that's a
yeah,
great analogy, actually.
yeah, 100%. So like with V4, these are kind of like different plugins. They're bits of code basically at the end of the day. But when you create a pool and you attach a hook to it, it's not attached to your position, it's attached to the pool, which was my initial misconception with it. I thought we could attach hooks to our position. But basically, you will have, the global 0.3% Uniswap V4 ETH to USDC pool. And that's maybe the top one, standard, just normal concentrated liquidity. It's just on V4 instead of V3. But then I can go and create another 0.3% fee tier for that exact same asset pairing, which is something that I couldn't do in V3, but I'm attaching a hook to it. And that hook, it could be stupid things. Like it could say, hey, people can only trade 9 to 5 in Eastern Standard Time or something like that. Or it could be, hey, if you want to provide liquidity in this pool, you need a KYC. Like that's just like the best example. Pretty
Well,
stupid thing to
Jake,
do because that
real
defeats the
quick,
purpose.
I want to ask a question because I'm actually curious about
Yep.
this. So, having going off of what you just said, does that mean like say me, you, and David are all in the same pool? You can attach a hook that affects my position, David's position, and your position because we're all in the
Correct.
same pool.
Yeah.
Correct. Yes.
Can you add that? Well, I guess you would be able to add that at any time, even after we're
No.
already in the pool.
No, it has to be on the pool initialization and you can't change it basically. You're creating a new pool that people can deploy into, if that makes sense.
Okay. So
Yeah.
it's only the hooks that are attached before you enter the pool.
Correct. Yeah.
Okay. All right.
Yeah.
Continue. Sorry. Just wanted to clarify.
I think David is you.
Yeah, so I was just thinking to myself, so Jake, can metrics analyze these hook contracts? Because if anyone can write a hook and deploy, initialize a pool with their hook, that means that there could potentially be malicious hooks,
Correct.
right?
Yeah.
So how do we
If somebody
analyze
writes hooks, are they a hooker?
They are.
I mean, yeah, man. Like, how do we analyze them?
Yeah, 100%. So there's actually a great tool for this that I can share my screen on real quick. And as far as like metrics goes, we will support pools with hooks, but we will not support like what this hook is, what it is, what isn't yet. Eventually, our goal is to eventually tie it in with AI, because like if we can show the raw code behind that hook, and then we can have like AI, like say, here's what this hook is, basically, here's what it does, blah, 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 and just use external knowledge, then that'd be great. But in terms of what I'm using hookrank.io. This shows the best hooks, basically. And then,
Hookerrank.io.
The
Wow,
best
what a
yeah,
great site.
it's like the OnlyFans of DeFi hooks.
yeah, exactly. And then total hooks is like 17,600. There's total trading volume of like $6.9 billion, or sorry, that's billion, yeah, $1 billion across these hooks. $195 million in TVL. See total fees. All the data is up here at top. But yeah, I mean, this is a pretty cool site because it'll show the types of hooks. It'll show LPing and swapping and stuff like that. So if I go to highest TVL first, this one that we have right here is called F launch. We can go directly over to the Explorer to view it, right? Like on the blockchain, we could see who deployed it. We could see the total swaps, all the data related to this hook. We could also go directly to their website. So F launch is a place where you can launch your coins, basically. And now in this instance, I don't know exactly what this does or whatnot. But it will show all the data. It'll show sometimes what it does and what the purpose of the hook is. And yeah, you can see all that directly through HookRank, and it looks like you can even trade directly through the pools. Now, others, let's find one over here. I'm just trying to find one that actually has data, because sometimes it will actually give a brief description of what the hook actually is. Like this. Here we go. This is AI generated on HookRank. So the BTC account hook contract manages the collection of fees incurred during swaps and deposits them into a Bitcoin accumulation contracts. It captures a fee based on the amount exchanged in a swap and can adjust rates based on user preferences within a defined range. The contract can handle specific cryptocurrencies, including ETH and WETH, and manages user wallet interactions by allowing them to set custom fees. Upon executing the swap, the contract calculates the fee and converts it to an acceptable base token, such as Bitcoin, for deposit. It's kind of hard to see exactly what this is doing, but my assumption would be A, it either requires the fee to be paid in Bitcoin, or B, which is probably more likely, it swaps, if you're in ETH Bitcoin, it swaps the ETH for BTC and puts it in a smart contract or something like that. But this is the tool that I'm using, David, for hooks.
Yeah, so I'm just curious about this. How do we know that the data from HookRank is valid?
It's a good question.
Valid point.
So as far as the AI generated thing goes, there's not really a way to tell unless you actually know how to read it. It's just the same thing. How do we know that this smart contract is actually safe? It's like, you don't really know unless you actually know how to read code. But HookRank does also have source code verified over here on specific hooks, where you can see the verification and basically just saying that this is a verified hook, I believe. And also, again, you're playing with the fact that you're kind of basing it off of TVL. Like, okay, this hook has $100 million of TVL. It's doing XYZ. Yeah, whatever.
Yeah, so it's still, even though we can see these details on HookRank, I'm just taking a look at the F launch hook right now, and
Yeah.
it's showing me underneath the security tab that there's a security score. Um, I mean,
75.
yeah, it's just not enough information. So here, if I go to view report, and then if I take a look at, it sent me to Solidity Scan,
Yeah.
Oh, hold on,
solidityscan.com.
David. Let me share your screen real quick.
Oh, sure. So let me just get the screen share rocking and rolling again. And so I clicked through to F launch, and then I clicked on security, and then I clicked on view report. So it's
If you
telling
scroll
me,
down a little bit, David, that one says total vulnerabilities found 936, 13 critical, 10 high, 101 medium. So
Yeah.
there's some stuff that we could look at there maybe.
Oh,
Lots
I
of them seem
know.
to be like informational and gas related too, which is like very low grade, doesn't affect functionality, but 13 critical seems relatively
Oh,
high.
there's a button over that says show details too. So solidity pragma version, severity low, status fail. Okay, yeah, you found it. Go ahead.
Yeah. So just taking a look at this, like, okay, if there is, how much deployed on these hooks, if it's done $1 million in total fees, there's $102 million in trading volume. The TVL is $7 million. So if there's $7 million deployed on these hook contracts, but there's 13 critical vulnerabilities, uh, I don't know
Well, and
that I
one of
would
them
be.
is an external call risk in critical functions. Presence external call risk. One or more critical functions in this contract include external calls, which may introduce vulnerabilities such as unexpected state changes or dependencies on external contracts. This can lead to significant security risks, particularly if the external contracts are not under direct control or lack proper safeguards.
Yeah, man. All of that is very scary.
Yeah.
Like, and this is one of the larger hooks too, isn't it? Or at least it's one of the seven-figure hooks. I mean, $7.1 million deployed on this. And if I take a look over at Solidity Scan, which I've never come across Solidity Scan before. This
Me
is
neither.
a new site for me. I don't know if this is even legit, but it's saying over 2,000 vulnerabilities found. It wants me to click a link here. It's saying the security score is, just about 50 out of 100. Like, I don't think there's any way I can say this is encouraging or good.
I agree.
Like,
Yeah.
like I wouldn't touch this. And that's the problem with V4. Like, why hasn't this been exploited yet? I don't understand. Like,
Or
what?
or maybe it has. It's just so subtle. It's like on a Office Space where they made that program that was supposed to only take like a couple of cents off of each transaction, and they
Oh
wake up
yeah,
the
it
next
ended
morning
up.
and there's like a
Yeah,
couple $1 million and they're
right.
freaking out.
Yeah.
And they put the checks under the guy's door, and yeah.
Well,
Yeah.
what I was going to say is referring to the solidity scan. This is actually again, don't know if it's legit, how it actually works, like if it works well or what. This is actually a relatively cool tool because auditing in DeFi, guys, is expensive. Like,
Yeah.
we haven't got
Yeah.
our quotes for our smart contract audits quite yet that we're building at metrics, but we're estimating at least $10,000 and at most like 15,000. Um, and it's like users aren't going to deploy if you're not audited. And on top of that, you're also taking a big risk as a company if you get
Mhm.
exploited.
You didn't do your due diligence.
We want to
Absolutely.
completely avoid that risk. So obviously we're going to pay for good audits. But like the last thing you want to do is pay 10 grand for an audit that, AI could have found, or, a very, very low grade auditor could have found for a couple $100 or something like that, just briefly looking. You'd rather pay 10 grand for an audit after you already have that like initial audit done. So that way you're just kind of getting that confirmation, hey, everything does check out, you're all
Mhm.
good. Or they find a very, very deep vulnerability that wasn't, able to be found by AI. But Solidity Scan, if you can have a tool that you can throw the code in and using AI and using how other contracts were exploited, and stuff like that to determine if a contract can be exploited or not. That's a very cool tool for DeFi and very necessary, I would say. So
Well,
Oh
I would
yeah.
I kinda wonder, Jake, if, here soon with AI, I mean, as quick as it's advancing, if in the very near future that there will be AI tools that just 24/7 try to crack, dApps and,
Yeah.
things like metrics finance, if you guys ever start to, actually connect to people's wallets, things like that,
Mhm.
there's gonna be a lot of tools like that to where it's just constantly looking for exploits and potentially fixing them at the same time as it finds them.
yeah,
Oh, that's super cool, Mike. And I hope that someone builds something like that, because I got to tell you guys, since I launched DeFi University 16 weeks ago, so
Mhm.
4 months ago, I launched DeFi U. In the
congrats,
last
by the way.
four, thanks, man. Yeah. But what I've noticed is in the last 4 months, I am now a target of scammers, bro.
Yep.
Like, I get, I get so
Welcome.
I
One
get
of us. One.
It's horrible, man. Like
I
I
get
get
them all day
scam
long.
phone calls, scam
Yep,
emails, scam
yep.
text messages, people who join all, groups who try to scam me. Like, dude, it's constant. And since I launched DeFi it's really ramped up. So yeah, I feel like I've almost made myself a target, just by going out there and talking about DeFi. So it's kind of weird, and I think a lot of it is like industrialized. Um,
Y
you know,
a lot of it's probably AI and, just automated 'cause I get a lot of the same stuff, just the emails, the phone calls, the everybody's, wanting to partner, just click this link and, to join a call kinda stuff, and I just ignore most of them.
yeah, yeah. So here's something else that I want to share with you guys. I want to get your input on. So I've got this LP, right? This position, but I want to be able to hedge the thing.
Mhm.
And if I just use Aave, like, okay, I borrowed ETH, I would have to be short. I would have to swap this ETH for stables, or at least half of it, to be able to have negative deltas on Aave to hedge a CLP on Uniswap. That is one way of hedging. You could also use perps, perpetual futures, to hedge your delta exposure here on Uniswap. But over the last couple of days, I've been diving back into Gamma Swap, and I had used Gamma Swap once in the past. I used it incorrectly. And, Gamma Swap, when I first started using this, I don't think that they had finished their document section yet.
Mm.
But they've got chapter 8 down here where it says hedge divergence in a CLP. And so I want to get your take on this, Jake. What do you think about this? Because I've been trying to use this calculator that I got, and it's not self-explanatory what you need to input into these orange fields to get a decent output. So I went ahead and took that spreadsheet, I threw it into Cursor, and I created my own little gamma swap hedging calculator web app. And this is, kind of cool. I'm still working out the bugs on it, but I got it to run earlier today. And so my question to you, Jake, is do you think that this could be a valid way of delta hedging a CLP? Have you taken a look at Gamma Swap? What do you think about something like this?
I have actually, and I used it at one point in time, and I do think it can be a good way to hedge a CLP. I want to, we dove into this a while ago, and it never just got, we weren't focusing on hedging at the time, so we never got like prioritized on our roadmap. But we want to implement this into metrics, because we've already worked with some cool projects. Like we've worked with Degen Prime, which is built by Delta Prime. Degen Prime is their more like Degen option, I guess. And you'll be able to see metrics analytics for your positions directly on their dashboard soon, which is pretty cool. And we want to do the same thing with other projects like Gamma Swap, where we can create an external API and you can basically calculate on their dashboard or go into ours and see more details and stuff. So I'll reach out to them. I'll see what they say, because that'd definitely be a lot useful if you could just simulate as well as add hedges within the same dashboard. Um,
Yes.
but when I use Gamma Swap, it did hedge it properly. The only problem I had was the actual interest that I was paying to the hedge. But as far as when you look at capital wise goes, like, hey, I put this much in the CLP and this much principal on the Gamma Swap hedge, and you factor out the interest and the fees, it hedges perfectly. Or not perfectly, but it hedges pretty dang good. So,
Yeah, man. Well, I mean, that's something that I'm really interested in. A member in DeFi yesterday, he shared with me the spreadsheet here, and he also mentioned the same thing, Jake, about the borrow APR.
yeah.
Because when you deposit initial capital here to open a position, in order to really be able to hedge a CLP, you've got to take out some leverage. And so when you borrow, you're paying to borrow. And if that borrow APR is astronomically high, well, then your hedge will probably end up costing more than it's worth.
Yeah.
So yeah, but I mean, 6.87%. You see, the problem is using this spreadsheet is, it wasn't immediately self explanatory. So I'm just working over here in Cursor to have it Just give me, a step-by-step instructions for how to use the spreadsheet. Um, so that's what I'm working on over there. But dude, like the thing that I really like about Gamma Swap though is the way that they describe CLPs as being very, very similar to either a short put or a covered call.
Yeah.
Or even they say here similar to a long put. I think it's more similar to a short put. But the payoff curve for a V3 ETH USDC CLP looks almost identical to that of a short call, which is super cool because if my understanding of the way that Gamma Swap works is that these these are like quasi V2 LPs. And so when you borrow against them, you create the inverse, which if you size that properly, can then hedge your CLP. So if you've got your Gamma Swap hedge and your CLP together, you can achieve like true delta neutrality
Yeah.
in a CLP. So if you can achieve true delta neutrality in a CLP, and if you set your range, if you're in ETH USDT or something like that, and you're quite narrow, maybe plus or minus 5%, then you could do 100% fee APR. And as long as your borrow APR for the hedge, the leverage that you took out over on Gamma Swap, as long as that isn't too high, you could have a really great looking position on, man.
I agree.
So, yeah,
Yeah. We got to try to get that implemented on metrics because it'd make it 10 times easier as opposed to the manual spreadsheet entries and stuff. Um, and one of the things I was going to say is one of the things that we're building internally that eventually we're going to create a product around is like perps hedging. If you can have like a perps position basically, and you can have an algorithm that constantly rebalances your perps position, it just ties into your API key. So every time there's a shift in your assets in the LP, it goes and it adjusts your perps hedge with leverage. That'd be super convenient. And
great.
yeah. So we have a beta version done that I'm about to throw like 10 grand of capital behind to play around with. And then we're going to start to
Bro,
scale
you're
that.
always one step ahead of me, man. Like, dude, I've been thinking about this exact same thing, and I've spent some time in Cursor trying to build it, but just a little bit faster, man. I love it though. That's so cool, Jake.
Yeah, 100%. And I'll keep you updated with how it goes. Yeah.
So, Jake, Mike, I want to get your input on this. This is something that I've been taking a look at recently because there are all of these different, perp dexes that have been launching,
Mhm.
and many of them have points campaigns.
Yes.
And they're about to have many of them TGEs and airdrops. And so
Mhm.
I'm just thinking to myself, like, okay, I would really like to farm an airdrop and get another airdrop in my wallet. Maybe if I'm lucky, something like the not the Camino one, but the wormhole airdrop. I did really, really well off of that wormhole airdrop a couple years ago. And there are guys who, off of the plasma airdrop, did a 9,000x.
Yeah.
Like literally a 9,000x, man. So um, I'm not saying that that's likely, but in order to even be able to participate in something like that, there were a couple of things that I knew I needed to do first. Number one, I needed to highlight and find out which perps dexes have these points campaigns and are likely to, have a TGE and do an airdrop. So that was the first thing.
Avantis, I'm farming points on Avantis right now.
I really like Avantis. I've got positions. I've actually got positions on Avantis,
Then you're
and
earning points. Look in the top right hand corner when you're logged on, and it will show you. Like right now, I have a 120,000 from that USDC pool that I was in, and then trading, I have like 17,000.
okay, so where can I
Up in the top
find?
right hand corner, there's like a little money bag with a number, and then like a little purple teardrop with a little number.
Okay, got it. Yeah. So it looks as though view XP. Maybe I have to turn the
Oh
VPN on to be able to
no!
see it.
Oh, go up, right there.
Yeah. So it says 0 for season 3, But you know what it could be, because I put these positions on a couple of weeks ago. Maybe it just hasn't had time, or maybe I'm the activity that I'm performing here doesn't qualify me for points, or maybe I need to turn my VPN on to be able to see it. So
Probably your VPN because, in the US, it like that yellow bar that's up there on the top says that
right.
it's not available in your area. You gotta turn your VPN on.
Yeah. So, the thing that I really like about Avantis is the ability to trade all these synthetics. Like, I've got positions on in Google and Microsoft, Nvidia, Tesla, the Qs, the spiders, gold and silver. And I could even trade WTI crude oil over here.
Yep.
So, I mean, this is amazing, and I really, really like it. Especially since we got earnings. So earnings were reported today. Microsoft reported, Google reported, and Meta reported.
Well, and you
Mhm.
And
got the QQQ, and I mean, there's a lot of different stuff.
yeah, so I mean, you can now trade those equities and ETFs, but from within your DeFi wallet. I
Mhm.
just, amazing, man. Really, really like Avantis. But if I just bring it on over here to the airdrop framework,
Mhm.
have you guys ever farmed airdrops like this? And
Oh,
do
yeah.
you know? Yeah,
No,
yeah. So
my co-host Jeff on, Tuesdays and Fridays, he has, the blockchain report. He's been doing it for years. His whole focus is airdrops. It's a little hit or miss, like I was telling you on the call today. Sometimes he'll do months of work and he'll get nothing, and then there's sometimes where you do next to nothing and make out like a bandit. I've gotten 3 airdrops just from having arrow locks, and they added up to over $1,000, and I didn't do anything except have arrow locks.
nice.
Yeah. I don't
Yeah.
really farm airdrops. I just I'm too busy to do that, so I just let the
I
investment
don't either. I just,
be play.
again, just base DeFi. It seems like I'm always running into them for free. I got the Mamo airdrop. I got some Avantis. I got Syndicate. What else did I get? I've gotten like a bunch of them. And then potentially, I mean, they're talking about if base that drops a token. We went over it on our show last night. Base is talking about dropping a token, and if they do some kind of airdrop, it's of course going to be for using base network and base network protocols and
Oh yeah.
bridging and swapping and things like that. So if you're using Aerodrome, if you're using Morpho, if you're using Mamo, if you're using Avantis, if you're using any of these base protocols, you're potentially going to be earning points towards that airdrop. And if you're like David and you're just using these platforms anyway, it's you're not, doing anything different than you wouldn't already be doing. You just happen to get some free money or some free tokens.
Yeah.
Yeah, so the way that I'm thinking about this is from the perspective of generating as much trading volume, or qualifying activities
Mm.
on these dexes, just so that I can get the largest airdrop possible. And
Absolutely.
yeah, but I'm focusing on the volume share models.
Mm.
So that's what I'm focused on, because it looks to me like it would be quite easy to gin up a ton of volume on these dexes by engaging in funding rate arb. So that's
Mm.
why I built out this calculator here. And there's a tool that I want to share with you guys called Loris.tools. And this is a funding rate arbitrage tool. So I've been using Loris in conjunction with all of the other tools that I use for research, the AI tools, to put together, which dexes do I want to operate on, and which tokens do I want to get long and short to generate a positive arb, so that I can cover my costs.
Yeah.
Because my goal is
Are,
really
are we
not.
going after David? Are we going after Piggy? It has 389 max arb.
Oh yeah, where's Piggy? But I mean, like, dude, these arbs, they're fleeting. Okay, so this is going to change and move every hour on the hour. or even less time than that. These
Well,
are
I mean, but we're used to
constantly
that,
moving.
with liquidity pools, the APRs move, things like that.
Yeah, so the goal here for me is I would probably just, determine what the expected move is for one of these assets. And then I would set my stop and take profit on both legs, the long leg on the decks with the most negative funding rate, and the short leg on the decks with the most positive funding rate. I would set my take profit and stop loss levels um, within the daily expected move, because my goal is volume. I'm
Dude,
not
this is
trying
cool.
yeah, I'm not trying to be profitable on the trade. I'm just trying to use the funding arb to pay for my expenses, and then just rinse, wash, repeat. Let those trades either hit TP or stop or get stopped out, and just keep running that so that I can generate a ton of trading volume. That's the idea anyway. Um, so yeah, built a calculator for that. Need to go back through this and make sure that it's working. I think it actually is. I think that I'm just inputting the funding rates here inappropriately. I think I'm formatting this improperly. But yeah, kind of an interesting idea there with funding rate arb. Um, but if you don't want to spend a whole lot of time, farming an airdrop that may never come or may be worth pennies when you get it, something that you could take a look at that, I didn't size this properly, man, which is really frustrating. I only put a couple $100 in here, and then I forgot about it. But if I go to position analytics, and actually position overview, where's transaction history? So I opened this on the 19th of December last year, and I forgot about it. And I wish that I had sized this properly, because this JLP, borrowing a stable to loop up JLP, this has done almost 40% over the last, 10 and a half, almost 11 months. And I forgot, man. Like, I didn't even know that I had this on until I was looking through a Solana wallet the other day.
Yep.
So this is like about as hands off as you can get. And take a look at JUP, Jupiter, and take a look at the JLP token over here on Jupiter, and what's it paying? So 11%. This updates every couple of days, but 11% at long, mostly Solana, some ETH, and a little bit of Bitcoin. Not bad. 11% yield. Now, if you want to get a little bit more picante, a little bit more spicy with it, then what you could do is you could put together another funding rate arb. It's a basis trade over here on Drift. So let me just open up the right wallet here so that I can walk through this one real quick, because this is kind of a fun trade here. So I'm in the right account now, I believe. And we were looking at this the other day. So if I go to portfolio, we'll be able to see the P&L. So it's done a whole lot of nothing since I've opened this. I opened this, a week ago. Looks like, was it a week ago? A little bit longer than that? No, it's a little longer than that. So it's been almost 2 weeks since this has been open, and it's done a whole lot of nothing. And so, what is this position that I have on here? If I go to overview, actually, let me go first to balances. That might be easier. So, what I've done here is I deposited JLP, earning that 11.36%, and I deposited some USDC. And then I got short the correct amounts of Solana, Ethereum, and Bitcoin to hedge away my Sol, ETH, and BTC directional exposure from JLP. And this would be profitable if the funding rates on Sol, ETH, and BTC perps on Drift are consistently positive. They have not been consistently positive. And so, what that means is if the funding rates are negative on the short perps legs, of this basis trade on drift, then I'm paying the funding to keep the short legs open. And when you're paying the funding to keep the short legs open on drift, that funding that you pay, it accrues to a USDC borrow position in the
Mhm.
main market on drift. That's why I deposited USDC when I opened the position, to avoid accruing a USDC borrow paying 10%.
Yeah.
So as of right now, this trade has done bupkis, exactly nothing. It's basically flat. But the reason why I wanted this on is, when or if Bitcoin starts to run again, then I would expect funding rates on perps to become more positive. I would expect them to become positive if BTC runs. And so that would mean, if BTC runs, not only would I expect JLP's yield to move a little bit higher, maybe above 15%, but the short legs on those short perps on drift, I would expect the funding rates to become positive, which means I would start earning the funding on the short perps plus the APY on JLP. So that's the idea with this trade. It hasn't worked yet, but the reason why I think this can work is because if you look at Vectis Finance, I think it is, um, that that protocol, they've been running this for about a year, and they've done like 40% in multiple accounts running this trade over the last year or so. So I think that this can work, and I'm testing it out right now, see if it works. But a lot of moving parts, Jake. You're right. The last time we discussed this, you mentioned a lot of moving parts here, and it's absolutely right.
Yeah.
So
And
yeah,
staying
man.
on top of it is the hard thing. But if you can stay on top of it and you can run a strategy like that correctly, you're going to be really profitable. You're going to be able to achieve kind of the end goal of this specific strategy. Which, again, it all comes down to, what are you trying to do in this industry? This is more stuff that I'm going to be personally doing in the bear market, and I'm going to get familiar with. But also, like, I'm going to have to find a balance of spending time on this versus letting it be somewhat passive. Because that's going to be the difference between yield. So
So when it comes to bear market stuff, um, what do you think about using PTs in a bear market to earn yield? You could, I think in another account, I've got a couple of PTs here. Um, and then, you can uh, provide liquidity here on Pendle.
mhm.
Uh, there are all sorts of different things that you can do here. And if you use Boros, you can trade funding rates. So this is great functionality. Jake, what do you think about Pendle?
I like Pendle. I think a lot of people are going to be using it though in the bear market, which is going to cause yields to go down. So
Yeah, the and Jake is absolutely right there. So let's just take a look at one of these examples. How about USD AI? Just some, a random stable coin. I think that this generates yield. It has something to do with AI data centers or something like that. But if we just take a look at staked USD AI maturing in 140 days, this is the LP APY. But what I'm looking for here is, I want on stables, and then I also want to add in, I'm looking for the PT APY, not the LP APY. So I'm looking at pools. I need to go back to markets and all categories, fixed APY, sort by that. I want to go ahead and take a look at stables. So you see this 57% fixed, but it's only for the next 21 days on some random stablecoin that I've never heard of here. So why don't I go ahead and scroll down? I'm looking for more time to maturity. How about this one? I've got a position in this REUSDE. You could earn a fixed 24%. But what Jake said about, during a bear market, more people are going to be using Pendle, and so yields will likely be lower, he's exactly right, because the driver of the IY is market participants on Pendle. When people swap into a PT, that pushes down the IY. When people sell a PT or swap out prior to maturity, that pushes up the IY. And
Well,
IY is
and doesn't David, real quick, the VE Pendle, Peter was saying the VE Pendle pays good. Isn't there a way to where holding VE Pendle, which is, I guess, staked Pendle, then you would get like a portion of those fees or
yes, yes, there
okay.
is. The challenge with that though, Mike, is that you've got to hold like some ungodly amount of Pendle and then stake it. And I think you've got to lock it for a certain amount of time to get VE Pendle, the vote escrowed Pendle. So
Hmm,
you need like a lot of VE Pendle for it to really help you in a meaningful way.
gotcha.
Um,
Okay.
yes, the answer is yes, it can help, but you need a lot. You need a lot of it for it to help.
Gotcha.
Mhm.
Yeah. So, stuff like this, though, 24% for the next 49 days on a stable coin, you need to know about the stables, though.
You
So,
do.
yeah, because you make money slowly with products like this, but you can lose money quickly with
Yep.
stuff like this. So, I really like Pendle. Um, I would love to start using Boros too, but they need to offer more dexes here. Right now, it's just Hyperliquid and Binance. Um, but this is Boros is really, really cool too, because here's a trade that you could cook up using Boros. Let's say that you're bullish on BTC, and you think that BTC is going to rip higher. Well, if BTC runs higher, that would likely mean that funding rates push higher also. So maybe rather than getting long BTC, you could just trade the funding rate. And so just express your opinion by getting long the BTC funding rate on Hyperliquid on Boros rather than trading BTC directly. So I kind of like that.
Yeah.
Yeah,
100%.
keep it 100, bro.
Yeah. Well, I would like to show what I'm currently doing in DeFi real quick and just kind
Yeah,
of
go ahead.
yeah. So basically, a couple things that I'm doing right now is just I guess somewhat recovering from strategies that didn't perform as well, and then also at the same time running strategies that seem to be performing well so far. So I have about like 55K or so in current
Well, this
liquidity.
this dashboard looks familiar.
It does. um, 55K of current liquidity or so, and my earnings are about 709 so far. I want you guys to pay attention to retention. We'll dive into that in just a second. But I have another 15 to 20K or so from other strategies that's either long with a little bit of leverage that I'm holding, waiting for a specific price to enter liquidity pool at or something like that. That's coming into the market as well through these liquidity pools. And then that will weight my portfolio to about 35% LPs, which is kind of like where I want to be leading into alt season. And these LPs are typically going to be stuff like Render, Tau, and Hype, stuff that already has multi-billion-dollar market cap or somewhat close to it at least. So that way, while these will probably go up a lot, and I probably will experience some divergence loss, it'll be significantly lower than if I threw something with like a 100, 200, $300 million market cap in here. So that's the strategy there. Now, I have one strategy, which is ETH Hype, which is doing good, don't get me wrong, but it's also doing bad, which is the loss versus HODL. And this one, as far as my strategy goes, it's really just waiting it out because Hype has done a good job at outperforming ETH. It really has. And that's causing me to essentially have this divergence loss in my portfolio, which is causing negative retention. Other than that, though, all the other positions are doing great. This is earning good income. It's not offsetting that versus HODL. So there's a couple things that can happen here, or where we're currently at. Number one, we could start to kind of enter a period somewhat like this, where we start to retrace. Like we went 84 to 89 or 90 roughly. Once we enter that period, that's where I'm eyeing rebalances. Because to me, the longer I can stay in range in this pool and consolidate, or at least go the opposite direction, the better. Because if I'm going the opposite direction and I'm actually starting to go back up in price, that means that I'm retracing some of that divergence loss. But at the same time, the longer I can stay in this pool, the more fees build up, which means more fees to offset the divergence loss that I currently have. So I'm kind of just like holding this out, but also I'm at a pretty crucial point where I need to decide if I need to rebalance, because if I go the opposite way and we continue to go down, then I'm going to go out of range. I'm going to have more divergence loss, and I might have to take a hit on this strategy. Now, when I say take a hit, obviously I'm still at a profit. It's just losing compared to the market. So then there's things that we could do there. We can
Well,
take that
and
money.
well, and
Yeah,
Jake, you're looking more towards gaining exposure to assets. I've heard you
correct.
say that before. So
Correct.
like for you, because of your your financial goals, it's not that big of a deal for you, correct?
Well, I'm at a profit, but this actually loses me a little bit of exposure to assets right now. So like what I'm
Oh,
looking at
okay,
is how
okay.
can I gain that exposure back, basically. Um, so how I kind of think through these things, and I actually um last night I was pretty bored at like midnight or something like that. So I made a 30-minute video on my second channel where I just go through literally all my learnings and findings from DeFi. It's like 55 different things. And that only captures a small portion of it. I'll be dropping that soon. But one of the things I want to focus on is just patience, because that's one of the main things here. Patience, patience, patience. So, what can we do in this situation? How
It's
can
that
we think,
print.
Yeah.
creatively? So, one of the examples is we can add capital instead of swapping. That ensures that we don't lock in any diversion loss, because we're not trading any of the now accumulated ETH. We're holding it, and then we're adding more hype. That's one way. It's not always feasible, but that is one way. We can do a very, very small rebalance where we just slightly adjust this min price, keep the max price the same, maybe slightly bring down the max price to the point where we barely swap any of that ETH back to it. That way we can stay in range longer as well and start to retrace that divergence loss. We could take that ETH, we could throw it on perps if we're expecting ETH to go on a run relatively soon. And on perps, we'd use something like 2-3x leverage. These are just many strategies. Now, I haven't really chose what I'm doing quite yet with it, but for now, I'm just letting it accumulate those earnings, because the longer it can accumulate the earnings without going at a range and start to kind of retrace its divergence loss, the better. And I will say this was at negative 300 earlier today, this morning when I woke up. So a lot can happen in the time span of like 7-8 hours or so. So yeah. And then in terms of the other strategies, this Tau one, again, like just with the volatility in the market, it hasn't had enough time to generate earnings to outweigh that, but it's pretty centered in range. And this is like a 6.2 to 13.2 range. So it's very broad. I'm not really worried about this. Just needs to build up its earnings. And then Soul Render, this one has very good earnings retention, pretty high APR for what it is, and it's a relatively broad range as well, 64 to 87. And this one's also doing probably the best, I would say, in my opinion. So when I'm allocating the ones that are performing the best, and I'm cutting my underperformers as quickly as possible. Now, there's options like BTC hype, there's options like Soul hype, but I just found the ETH hype to be the best one when I entered into this.
Awesome, man. I
Yeah.
love it. This
And then
looks
lots of
great.
models hasn't changed. So, yeah.
Yeah, so I mean the tokens that you're allocated to there, Jake, Render, Solana, BitTensor Tau, Hype, Hyperliquid, Ethereum, these are all high quality digital assets, man.
Yep.
So the number one most important thing for me is, do I want to hold the token in the first place?
Of course.
And then after that, well, there are all sorts of different metrics that you're going to have to take a look at to determine whether to provide liquidity or not. But what you've built there looks pretty darn good, man.
Thank you, David. Awesome. Well,
Well,
that's
I guess
it for
I
me,
guess I
guys.
could show my little baby.
I want to see it, Mike.
All right, here it is. It's coming up. It's thinking about it. All right, here we go. So, like you said, I mean, a lot can change quick. I mean, I was up to about $300 on my P&L this morning, but with the market doing what it did,
Look
and
at the
then
retention. Look at the
this
80% retention, though.
what's that?
The retention under earnings, 80%. That's really good.
Yeah, no, these three pools. I mean, this is only three of my five that I have open right now. But these three have been doing really well. It's only just over $3,000. Like I said, total. I think I have maybe $6,000 in liquidity pools right now. But it's across the board been doing really well, and it's Coinbase Wrap Bitcoin ETH is one of the pools that's been doing really good. At one point, Oh, this one here, Coinbase, Wrapped Bitcoin, and Arrow. This one earlier was a 1,000% APR for a blink of an eye. But I mean, this one I just rebalanced. I'd say probably like 2 hours ago, and I've already earned like $4 on this 1116, and then this wrapped ETH KTA. I've been basically using this to build my KTA position more, just because KTA actually started moving quite a bit, and the APR pumped, and so this has been open for about a week and a half, 2 weeks. But probably in the past 5 days, I'm earning about $10 a day on this, I believe,
Nice.
is what I'm averaging.
So do you
So
think, Mike, do you think that maybe when the CBBTC Arrow LP, when the yield spiked, could that have had something to do with voting on Aerodrome? Doesn't the voting period end soon, or maybe not?
I
Um,
think it's just that Arrow, was moving. It got to where it broke 100, or not 100, broke $1, that psychological
oh,
level.
that's right. Okay, so that makes a lot more sense then, because
Yeah,
on the Fed day today, Arrow most likely traded off, right? So traded down. Uh, no, no, not really. So Arrow
Arrow's been
today,
looking
man.
strong.
Yeah,
Anybody that is bullish on Base, the new Base app launches that fully to the 25 million Coinbase account holders the middle of November. So I strongly feel that Arrow, Morpho, all those base plays are going to perform well. And if you look at the prices right now, the ones that seem to be getting the positive price movement is Avantis, Mamo, Aerodrome, a lot of those. And
oh no.
Uh-oh.
Yeah, looks
And now
like he's not getting any more positive price movement over there.
he's not. Um, but yeah, I mean, I'm pretty bullish outlook on the overall market. We've seen our kind of declines and everything like that. Everybody wanted a crazy October. We haven't seen a crazy October. But moving into November, December, like I'm curious to see how this market's going to perform. Curious to see where it's going to go, and what that's going to look like. So
I think 150K, bro. I
really,
think BTC, yeah, I think 150K by the end of the year.
I got to
Like
keep
at
my leverage trade on BTC on then over on Drift.
I mean, yeah, I'm just thinking it looks like the equities markets are primed to keep melting up into year end.
Yeah.
And the bond market is not showing signs of stress.
Okay.
And it just looks like, with the path of rate cuts pretty clearly, to the downside, more cowbell over the
Yeah.
next several months. So, man, like I think 150K by the end of the year. Let's go. That's what I'm looking at.
Yeah.
Well, all right. It's those of you that have arrow locks or black hole locks, don't forget to vote here in an hour. The epoch ends. There is actually, I'll show it real quick before we go. Let's see. Let's share this instead. So there is a pool, part of the Arrow Ignition program. This is the last airdrop I got for basically having my locks. Is all you do is vote for these Arrow Ignition. So there's 10 million Light Key, a new project that's about to launch, that will be distributed to anybody that votes for this pool. You'll get free tokens for voting for it. How much that's going to be, who knows? It might be 50, it might be 5,000, who knows? But just make sure that you don't forget to vote if you're manually voting. And do either of you gentlemen have any closing thoughts before we close this out?
No, not at all.
Man, just looking forward to November.
Yeah.
October, like, dude, I really like October. I really like Halloween. I like the changing seasons. I
Oh yeah.
don't like the Binance flash crash manipulations, though. That's, you know,
Uh,
like I could do without that. But looking forward to the month change. And, I think there are going to have to be some institutional guys who need to put some window dressing on their portfolios into year end. So I think that equities get chased up into year end, and I certainly hope that Bitcoin can get out of this malaise that it's been in and print above 126. Man, we need to see volatility expand on the way
Yeah,
up. But yeah, that's what I'm positioned for. Positioned for number go up into year end. So let's go, man.
100%.
And judging off of what people much smarter than me are saying is we need to see what David just said with Bitcoin. We need to see ETH break all-time highs and hold that for more than a couple of minutes. And,
Yep.
and, and if it can, keep that, if it can keep those gains and Bitcoin can, break its, all-time high and, keep that strength, then potentially we might see that alt season we've all been waiting for. So fingers crossed, and until then, hopefully you've done your research, you're in good positions, and all you need to do is sit on your hands and wait.
Yeah.
So, gentlemen, I appreciate your time and coming here and spreading the wisdom. And until next time, Veteran Crypto out.
Peace, guys.
Peace.